Realty team, and we're going to go over our interest rates. We're going to break down what is the difference between NAR, LIBOR, and one key MLS, how the fees are associated when they're due, and we have some good other topics that we're going to go over as well. So if you are watching this live, you guys can just put in anything in the chat box or just unmute yourself. Or if you're watching this recorded later, you guys can send me an email with any questions that you have. Okay, so let's get started with the interest rates. The interest rates, according to last week for Freddie Mac, they were around 7.22. And we spoke about this on last meeting that they are trending downwards. And that's exactly what we want to see as a realtor. So as of this morning, they were around 7.08. So even better than 7.22. Okay. So what does that really mean? That your principal and interest for this type of loan, you're looking around 3,353. So that's your principal and your interest. Then you would need to add your property taxes and your property insurance on top of that. But still, we have seen this number go from around $4,700 to, going down and down. So with this collectively, with your property taxes, this person might be paying around $4,300 compared to $4,700, right? So when the interest rates are going down, it's going to have a really positive effect because their monthly payment drops, right? So if they were to go with FHA, it's going to be 6.40. Seems really appealing. I just had a conversation earlier this morning with one of our agent. He's showing me a CD. He's saying, "Hey, why does my guy is paying $13,000 more for this FHA loan?" And it clearly states that it was 1.75% upfront FHA cost. So that is going to be an upfront cost when person is going with the FHA loan. If that person was going with the fixed rate conventional loan, and that person will pay a little bit higher interest rate compared to FHA, but there's no 1.7% fee for that FHA. So a lot of pros and cons for that. Your client needs to speak with the loan officer and see which is a good option for them. Okay. So we usually give a buying power for one family. So we decided to do a two family today. And let's say a person is looking for maybe $900,000 house, and they have $100,000 in their savings, and they're going with the a mortgage amount or the loan amount for $800,000. If it's going to be $800,000 and today's rate that we saw the average 7.08, you're looking at around $5,300 for their monthly payment, right? So what does that show? Just within few weeks, we have seen the interest rate come down from 7.83 to 7.08. We saw this even higher. But just imagine you have a client that got a pre-approval maybe a month ago, 2 months ago, right? We knew that we were on the higher end. You need to tell your clients that, hey, go speak with the loan officer again. The interest rates dropped. Your buying power increased, so you need to find out how much did it increase. Your loan officer is the one who's going to tell you. But in this example, if the person had a pre-approval at 7.83, their pre-approval might be around $743,000 for the loan amount. Whereas if they were to go back again today, and they might be able to qualify for $800,000 in loan amount. Huge difference just with these percentages. So you have to guide your clients to go speak with the loan officer and get the updated pre-approval. Okay, we need to see updated pre-approval in the coming months. If the interest rate come down below 7%, you want to encourage your clients again, go get the updated pre-approval so we can know what is your new buying power is as of today. Okay, so what do I need, or how can I qualify for $800,000? What does my income needs to look like? What does my down payment needs to look like? So this is one of the scenarios that we're doing here. If a person, it could be a single person or a couple, making $145,000 in income, and they have about 75,000 for down payment, they're pretty much taking care of their monthly debt, and their debt is around $250. And we're going to use today's interest rate 7.08. our property taxes, we're going to use around $8,000, right? Let's say they're purchasing in Queens here, and it's going to be your property insurance around $1,500. So with this scenario here, this person can qualify for $800,000 home price. Okay. So again, your DTI matters a lot. If we're doing it conventional, we will take it up to 49%. If this person would want to go with FHA, we can take it to 54% and they will increase their buying power as well. So just know that if they're looking for a two family, they need to have a solid income. If they don't have solid income, if they don't have solid credit scores, they don't have solid down payment, you might be wasting your time. You might not, right? We have seen it in many cases where you're showing the house, they seem like they're not ready, but all of a sudden they pull out another co-signer and they have no issue getting that loan. So you want to be part of that deal, but just know that in order to qualify for at least $800,000, you need solid income. Okay. So we have seen in the recent months with price cuts, right? That any listing that you've seen, even in our office, we have certain different scenarios. Someone listed a single family in Nassau for $1.1 million. When we're doing the comps, they're coming down around 950. So huge difference. So sellers, sometime when you have a listing or you're about to get a listing, they go with the highest price. But I have seen, Mr. Ali's on the line too, where he'll go in depth with that seller and make sure that he's pricing it right, so the price drop doesn't have to be there or as often as other agents. Some agents, they are just yes ma'am, yes sir, yeah, I will go ahead and sell this house for $1.1 million, whereas that the property is now more than maybe 900 or $50,000. So we have a big gap. When you have a big gap, you list that on the higher end, eventually it's not going to sell, and eventually you would have to drop that price. And you can see here the price cut percentages this week over the last few years, right? This is the chart here. You guys can see the biggest jump that we saw was in 2022. This happened with our office as well, especially end of 2022, where there were the interests were started to increase dramatically, and all of a sudden the home sellers were scared. They said, "Hey, I just want to sell this house, so let's drop it a little bit." You can see around 43% were price cuts, and that's huge. So the point here is that you want to list it at the correct price, okay? Or at least appealing price, so they have more eyeballs coming into that property, so you guys can sell that quickly. We had another situation where the property was listed at around $900,000 and they're going under contract for around $800,000. So almost $100,000 gap, right? So we have the right tools. We have RPR, we have geodata, we have MLS, we have the whole nine yards. So you guys can see a full picture, just like an appraisal can. So why not provide those tools to your home seller and price the property correctly? All right. So here are some things in the news, guys. Some headlines: first-time home buyers to influence top housing markets in 2024. And we have known that first-time home buyers were the ones that were just holding on. If it was an investor that got a good deal in 2023, they went with it. But the first-time home buyer, just because of their monthly mortgage payment, they were just scared. And now the interest rates are coming down, and they're going to be more appealing to the market, and they're going to be investing into it. Right? Home buyers are losing patience, and we have seen that over and over. Right? Some of them are waiting for almost 2 years. Some of them are waiting since last year. One of the closings that one of our agents did yesterday, this person was living in a basement and was living in a basement for at least a year or two, and has been looking for a property for about a year or a year and a half now. Now they had a kid. They didn't want to live in the basement and they wanted to move out. And eventually they made the move and they bought a new house yesterday, right? So these home buyers are losing some patience. So if you have a client in your database, follow up with them, see what their situation is. Okay. They don't want to be standing on the sidelines anymore. So be part of those transactions. And now CNN have mentioned the same commission deals that we are going through, the lawsuits that's going through. So CNN, Bloomberg, New York Times, all these channels are putting out the news out there. Hey, why are real estate commissions at 6%? We know they are not fixed at 6%, right? But some people just assume that they are 6%, and that why that might be changing. We know that there was a lawsuit going on. They're still going back and forth. It might take years to find out. The point here is that you tell your home sellers when they're ready to sell the house, hey, it's optional to pay the buyer's agent. As long as you disclose that, you would not have any issue. You want to give them the pros and the cons of paying the buyer's agent. Okay. If you want to sell it quickly, whatever you're paying me, I'll pay half of that to the buyer's agent or whatever percentage you guys agree on. Just got to make sure you guys are disclosing it to the seller. Mainstream media is getting the word out there, and that's why almost everybody, all the homeowners will know this concept by next year. So you want to be part of that and tell them upfront. Okay. Another thing in the news was this is brought to you by from List Report that demand for newly constructed homes are on the rise. Again, if it's a first-time home buyer, they might not go with the new property, brand new construction, right? They might go with a beat-up house, and they maybe put in maybe another $40,000, $60,000, upgrading the kitchen, the bathroom, and they might be really comfortable there, and they're gonna build a comfortable or live there, a comfortable life there. But there are some people who do not want to go with the renovation. They're willing to pay the premium price. So you want to be part of those transactions as well, right? We have clients that's willing to pay over $1 million, 1.1, 1.2, 1.3. Heck, there's some people that was willing to pay $1.5 million for a single family. Everybody has their own budget. Everybody has their own jobs and all their scenarios. Just don't judge them, right? You don't know where they are in their lifetime, or where they're living right now, or how what their situation is. As long as they have a pre-approval, I will simply show them the house. Okay. New construction, they don't have to worry about any repairs for a long, long time, and that's the main reason people go with new construction. Okay. Another thing in the news was that high mortgage rates have limited opportunity for home buyers and sellers. Here, what might change in 2024. So, in 2024, home buyers have most likely stayed put in 2023, right? Why are they staying at that in their current house? Because majority of them refinanced during COVID time, and the interest rate is below 4%. Some of them are below 3%. Some of them we talk to and say, hey, mine is at 2.99. You think that person's gonna sell that property, or should they sell that property? Now, if they really, really have to, right? Otherwise, they're gonna hold on to that equity, build that asset, and let that equity build over the years, right? So some of them do want to upgrade; they will make that move. Yet those home buyers or homeowners may be willing to move for the right opportunity, right? When they will move, majority of the people are saying when the interest rates hit around 5%. I will go ahead and make that move. 5% is the target for majority of the homeowners right now. Right now, we're still in seven. It might take another 6 months to start hovering around 6.5, 6.6 in that range for quite some time. And then eventually, hopefully, it comes down to around five, and maybe end of next year. And then we'll see more people making those moves. Again, everybody has different situations. Just follow up with your clients and find out what is theirs. Okay. As prospective buyers are more willing to take a chance, right? We're going to go through the benefits. Why is the right time today, or this month, or next month is the right time to purchase a house? So we'll go through that. Okay. 5 reasons why buying a home right now makes sense. This is the conversation you should be having with all your clients that's in your database, right? Number one, you can buy a house now and then refinance later, right? Some people did that in the last 6 months. All of them, or majority of them, will refinance down the line, because if they were at around 7 point something, and they can be in 5 point something or 6 point something in interest, and their mortgage payment is dropping around $500, $600 per month, it's a no-brainer. They will go ahead and refinance. So when you're talking to your clients today, tell them they can buy it now and then they can refinance later. Number two, Home prices are probably heading up. What do you think is going to happen when one property has right now maybe four people that's qualified, and then if the interest rates do come down and that property has 20 people qualifying, the prices will increase. Simple as that. It's just supply and demand. If you're waiting until sixes, you will have more competition, right? So as of today, number three is that there's less competition. You're not competing with a lot of other home buyers. You qualify at this mortgage rate, not everybody else does. Maybe they qualify for $600,000 property, whereas I'm putting an offer for you today and you're looking for $700,000 property, right? There's less competition. Number four is going to be your inventory of homes is on the rise. You have a little bit more options that previous owners or previous buyers did a few months ago. The interest rates are dropping a bit, so there's little bit easier for the homeowners to sell that property right now. Not everybody's doing it, as we mentioned, but there's a little bit more fewer than before people who are doing it, right? So the inventory is on the rise. Number five is that if it's the right time for you to buy a house, then it never makes sense to wait. Why would you want to wait today if you already qualified? You're paying your rent maybe, right? Why would you not purchase a house and start building your equity as of today instead of waiting 6 months and be more competition with other buyers? You're going to have to put in higher prices. Quite the opposite what we are just mentioning right now if you were to wait. So when you're having a conversation, mention these bullet points so you guys can make those offers. Anybody disagrees with this in any way? If it's the right time to purchase right now, right? These are the solid bullet points that you should be using with your clients. Okay. All right, guys. Next topic we have is what's included in our closing cost, right? This is the closing cost that your buyers are paying. Sometimes they say, hey, my down payment is my down payment. If I'm buying a house for $500,000, I'm putting down $100,000 as my down payment. That's my equity. I'm already putting it in my house. That is going towards the mortgage, right? Remaining $400,000, that's your mortgage. You already put in down payment $100,000. You have $400,000 mortgage. Your property's worth $500,000. Great, right? There's that down payment is not a fee. Is not a cost to you in any way or form, right? You're truly just putting it into the house. But your closing cost, there are what's in the name. It's an actual cost. It's a fee that you're paying to the lender for different things. That's going to be on your closing disclosure. That might include your loan origination fee, your home inspection, your appraisal, your prepaid taxes and mortgage insurance, your title insurance, your recording fees, and your underwriting fees. So you want to mention these things that, hey, do you have enough for your closing costs? Your loan officer will give you all the details, but as a realtor, I should tell you, hey, there's a down payment and there's a closing cost. And this is what's involved in a closing cost. Okay. I want to give a shout out for Hassan here for home inspection. Please, guys, if you guys have an offer accepted and you need a home inspector, reach out to Hassan so he can help you guys with the inspection there. Okay. Okay. Next, guys, this is the report card for Queens and Nassau. We want to review that. And these are stats going back 60 plus years, right? So you can rely on those. So, is this the right time to purchase a house? The question you should be asking your clients like how long are you going to live in that property? If you're going to live there for a year or two, be honest with them that maybe it does not make sense to live there for a year or two, right? To buy the property and live there for a year or two. You might build equity in those 2 years, you might not. But if you plan to live there for 5 years or more, it makes sense to live in that property, own that property, and sell that property if needed, or rent out that property when you're ready to move out and purchase another one. Okay. So, according to Queen's data here, that over the year, this is your historical appreciation for your properties in Queens. If you look at the last 5 years, we have seen it since COVID hit, the prices increase. So you're seeing around 6.31 appreciation there. For your 10-year, you're looking at around 5.33. And if you go back all the way about 63 years, you're still looking at about 4.86. So you can rest assured that if you're going to live there for quite some time, 5+ years, it makes sense to purchase a house, right? So how does that compare with Nassau? 5 years, 6.66, 10 years, 4.61, and 63-year average of 4.33. Okay. So let me just mute him. Okay. So you see your queens here, 6.6, Nassau 6.6, and your queen 6.3. So you can know that at least they're getting their value is appreciating around 6%. And that's a good number for any type of investment that you have. It's better than owning another business or running that business. This is your building equity while you're living in that property. If you're renting out, you're simply paying the rent. When you move out, there's nothing to gain except for the stuff that you have inside that house, right? There's no equity built over the years. There's no benefit of, living in your own rental. It does make sense if you're going to be there for short term. Okay. So here are some stats here, guys. If you were to work with a realtor and when you're not working with a realtor, right? Home sellers working with versus without realtors here. 79% of the Americans who sold a house in 2023 or 2022 used a real estate agent. That's a lot. Around 80% people did use that, right? Of those 21 who did not use a realtor, most sold to cash buyers, right? These are people who are just looking for a cash buyer or investor or iBuyer, right? Or they list their house for sale by owner. Only 13% people did that. And majority of the time, the reason they're doing for sale by owner is that because they don't want to pay you as a realtor. They think that they can do your job, right? Your license, you have experience. This is maybe the only house that they're selling, and maybe you sold plenty of houses in the previous years, right? So you know the whole process. Maybe they just remember, hey, it's easy, just going under contract and I'm good. They might be losing out a lot with the negotiation, with having access to the LIBOR, putting the property on the market, having more eyeballs and all that. So these sellers simply are losing out on the final price. Next, you can see that more than half of these non-traditional home sellers, 53% of them, say that they wish that they used a real estate agent, right? So the regret is there. Do they get a second chance? Not really, because they only had one property, right? So you want to be part of these transactions by talking to them. If you see a for sale by owner sign and you say, hey, I understand that you're trying to save some fees, you don't want to pay the realtor. Let me come take a look at the property. I might have a direct buyer for you. Break the ice with them, talk to them, go see the property. About 53% of the sellers who used a realtor accepted an offer within 1 month of listing, compared to 39% of non-traditional sellers. So again, your offer will get accepted a lot faster. Why? Because I'm a realtor, I'm going to be doing a lot more showings than what you can do. You just put up a one sign in front of the house. I'm going to do a lot more than that, Mr. Seller. Okay. 86% of the home sellers regret some aspect of their home sale. Sometimes it could be they have an offer accepted. They have no idea that maybe a inspector like Mr. Hassan is going to go in and give them the buyer 20-piece PDF or 20-page PDF with all the things that's wrong with the property. And guess what? The buyer is going to negotiate that price down, and the home seller might say, hey, yes, I see the report here. I do see that the roof needs replacement, the boiler needs replacement, whatever the situation is. They do regret some aspect uh, for that transaction. Okay. So all these things we will share with you guys here, but these are all the stats that there's so many benefits for them to use, or anybody or seller to use a realtor compared to not using one. Okay. And this is what someone said for Remax, a broker owner here. What did 2023 look like? And it's a very similar situation what we have seen. All the majority of the agents, whatever production that you guys did in 2023, you guys dropped in 2022. Whatever you did in 2022, in 2023, it did drop, right? Some of them are 10%, some of them are 20%, some of them are 50%, But situation, what was the issues that we had in 2023? Higher interest rate, low inventory. Those are the biggest one, right? And that's what most people, have the trouble selling or buying because of those two things. In 2024, some sellers and some owners are will have that same issue, but they are just more buyers. As we mentioned, there will be some buyers who are just sick and tired of waiting. They're still paying the rent and they need to make that move, and we want to help those. Okay. So if you want to be successful, guys, right, you're gonna need to have your successful, you need to have habits that's gonna make you successful, right? The number one is your time management. And I respect the fact that, majority of the realtors out there, they do have, or they treat their real estate as a side hustle, or they have another job, part-time or full-time. Perfectly fine. But we all have 24 hours, right? How are you going to manage that? That's going to be on you. How are you going to prioritize your task? Hey, set clear goals, as we mentioned, and how you going to create your daily schedule to maximize your productivity, is going to be on you. What type of, hours are you willing to put in? It could be 10 minutes, it could be an hour, it could be a half a day. It really depends on you, right? The thing that matters here is the quality. Hey, if you have a client and you're bringing quality value to them, they will stick with you guys, right? Time management, it has to be all on you. How are you going to manage your time? Continuous learning. You're, attending these meetings, which we really appreciate, right? We keep you up to date with the interest rate and what's going on with the market. We provide you with market data, right? Local insights. We're doing all that for you, and you guys are part of that. Great. We have maybe 60 other agents who are not part of these meetings right now, and maybe 10 or 20 of them will watch these recorded videos. But remaining of those, rest of them are not part of this, right? So you think they will have that knowledge? Maybe they'll read a headline or or two, but they're not fully engaged. So if you want to be part, good habits or successful habits, you want to be part of these meetings, right? You want to have effective networking. Realtors and loan officers, we have to build and maintain relationship with clients. It's just not just adding their name to the database and sending them a couple of links, right? It has to be more than that. We have to know their situation, how fast they want to go out from that property to the new one. Okay. You want to adapt to any new technology that a office would provide, but we're not trying to change anything for you guys all of a sudden, right? KV Core, Transaction Desk, those are your two main softwares out there. ljagent.com is a simple website. Will have all the information that you need for your realtors tools to get your any transaction done, right? So just remember, you're part of a big event for your first time home buyer. First time home buyer has a dream to purchase their own house, and you want to help them achieve that goal, right? Simply put, you want to show them as many property as possible, right? You want to make sure that they have the you put in the lowest offer, right, or the best offer, so you can at least have the offer accepted, and make sure you do your comps, right? When the inspection time comes, talk to the inspector, make sure that whatever is major, because you're representing the buyer, you want to make sure that you have their best interest. So speak with the home inspector, see what's major that needs to be taken care of, and wait for the final report. And not everything that the seller will agree on, but you want to take care of that. When the contract time comes, you want to make sure what right contingencies are there to protect your client. The biggest one is your home appraisal contingency. Hey, we're offering you, give you example, $800,000. We want to make sure that the bank it says is the same amount, or they value the property at the same amount, right? You want to make sure that the final walkthrough, everything is the way it's supposed to be. right? At the closing table, we want to make sure that everything goes smoothly. So, being a realtor, you're going to achieve their goal by helping them out and guiding them every step of the way. Okay. All right, guys. Next topic, we're going to talk about memberships. This is thanks to Mr. Hassan. He asked for last week. So I give you a full breakdown. So by end of this meeting, I hope that you guys know what is the difference between NAR, when we say National Association of Realtors, what is MLS, what is LIBOR, and what is One Key. What are the fees for these companies, and what are the benefits, and what are those fees due each year? Okay. So we're going to start off with NAR first. So when you look at NAR, this is your National Association of Realtors, right? This is the America's largest trade association. Is representing more than 1.5 million members. Huge case that's going on with the whole commission thing. NAR's involved in that, right? We saw a couple of changes because of NAR. So NAR has 1.5 million realtors joining. So is it from just New York? No, it's national. It's from all the states in the United States of America. Okay. What is their mission? Their mission is to empower realtors like yourself, and they preserve, protect, and advance right to real property for all. Right? They want to be the one who's guiding you guys. We have a code of ethics for them. Hey, you should follow this, don't do this. All that comes from code of ethic comes from NAR. And you see this, she has a badge here for R on that. That is a trademark. So not anybody else. If you're a real estate agent, right, you just can't call yourself a realtor. If you want to call yourself a realtor, you have to be part of NAR, simply put. Okay. So we said realtor brand, you see something like this. These are trademarks for them. Code of ethics, we mentioned. You have to go through code of ethics. They make sure that you comply with them and you're going to follow those rules. Fair housing, make sure that you're treating everyone equally, and they have some educational courses, right? We have some agents who have completed many of these courses. That's great. I don't think there's anything, any educational course that you can take and not grab one or two great things out of that, right? So they have for one for buyers representation, they have one for sellers representation, and they have one for short sale foreclosure. So there's different courses. I believe they have more than 10 plus courses, but the buyers one, the sellers one, and short sale one, which I highly recommend from them, right? You do have to pay separate for that, but they offer educational courses, and that's part of NAR. Okay. And how much do they charge? How much does NAR charges? Right? Do I get a separate invoice for this? It's part of your main invoice that you're paying LIBOR each September. For NAR, out of that invoice, you see this highlighted. Yes, Mr. Hassan? Yeah. This one? Sure. No problem. Let me know when you're ready. Yep. And later on, guys, around 4 or 5 o'clock, we will share all these slides with you guys too. Okay. So, how much does your NAR membership cost? Just NAR. So, NAR is around $201 for 2024. Every one of you guys already paid this invoice in September. So, in September, you guys paid 551, right? In September. And when you look at the breakdown for that invoice, you guys can see what I highlighted here. In 2024, NAR 156, and then for NAR advertisement 45. Both of them put together, you're looking at $201. So that is for you to call yourself NAR a realtor. You're part of a membership. You have that part of a membership. You're following code of ethics. That's what NAR is about. Okay, it's for every state put together. As long as you're part of a board and you're part of NAR membership, you can call yourself a realtor. Otherwise, if you're not calling yourself a realtor, what can you legally call yourself? A real estate agent, a real estate salesperson, any of those. Okay, just remember realtor. You can see the R next to that as well. That means it's a trademark. Okay. So how much you're paying? 201 for the whole year. When do you pay this? In September each year. Okay. Next, let's talk about LIBOR. When we say MLS, right? MLS means multiple listing service. It's just a word. It's just MLS is a word, right? Part of the MLS is your LIBOR. This is your Long Island Board of Realtor, LIBOR. That's what we are part of, every one of us, right? So we join LIBOR. When we're joining LIBOR, on the second form you're filling out, that is for your NAR, which we spoke about. For your LIBOR, it's a community of realtors to list properties on one database. What database is that? It's your Stratus, right? We put a property on Stratus, everyone can see it, right? What are the benefits? It will give you that property more eyeballs, right? It will have more offers coming in, and you can close that deal much quicker. Excuse me, guys. Right? So who wouldn't want to close a deal quicker? If we didn't have Stratus, if we are not part of LIBOR, what are we gonna do? We're just gonna put up a sign. We're gonna try to promote it, but we cannot get those same interaction with the other agents and the buyers if we were to put it without it, right? So you want to make sure that property goes on Stratus. So LIBOR just doesn't give you Stratus, right? It knows that you're paying LIBOR. So what other benefits that they're giving you? They're giving you a tool called RPR, which majority of you guys using, right? They're giving you transaction desk. Remember, we were paying separately for dot loop. We dropped it because of LIBOR, because their transaction desk does the same thing. They also have showing time. If you guys want to schedule showing through showingtime.com, is part of it. You guys can just do it. There's no cost to the buyer's agent for that. Okay. So the main benefits for LIBOR is your Stratus, RPR, your transaction desk, and your showing time. There's more, but this is what I put in there as bullet points. So if you run into any issues with the listing or another agent, right? So instead of going to the court, LIBOR will try to handle it first, right? If there's anything that's obviously if you're doing something criminal, then they will not take care of that. It will be straight to the right authorities. But if it's a listing issue, hey, this person did this person is I'm supposed to get paid this much, but I got paid this much. Any issue that you guys have with another agent, because the other agent is also part of LIBOR, they can set up a meeting and make sure and see what happens here, both sides. If they have to take legal action, they will guide you guys for that too. Right? So remember when we said LIBOR is for Long Island and Queens only. Okay. And how much does LIBOR cost? So that same invoice that we saw, 551 was a total, and if we deduct that 201, we're left with 350. So 350 out of that 551 is going to LIBOR. Again, it's part of your 551 invoice in September, right? So we have NAR, we have LIBOR. And then what is one key then? One key, it combines LIBOR and other boards like Brooklyn, Bronx, Westchester, and all that. They combine them. So we can see some properties from Brooklyn, from Bronx in our Stratus. Before this one key concept, we could not see any of those listings. This got created about, I believe, this is the third year now for one key. So this is what the coverage map looks like. It goes upstate, it goes to Westchester, it goes to Suffolk. So you can see that it's covering a lot more than what we were supposed to cover just Queens and Nassau here, right? So that's the benefit for one key. And how much are you paying for one key? So one key membership is not part of that 551 that you paid in September. It's $175 now, and it only comes in January. So you guys gonna see that $175 new invoice coming through you guys for you guys to pay early next month. I believe they already issued it. It's already in the system, but you guys we will send you guys reminders to pay that in January. Okay? So you have your one key, LIBOR and NAR put together, they're due in September each year for 551. Then you have your one key MLS in January each year for $175. If you combine them, you're paying $726 per year for both of these memberships. Okay. If you are joining for the first time to NAR or MLS and everything, you do have to pay $200 setup fee, as you can see here. Okay. Otherwise, moving forward, it's going to be around 726. Each year, these numbers increase $40, $50. Some of you guys are realtor for a long time, so you guys have seen it increase over $100+ already. But we do know that every year it does increase a little bit. Okay. So we don't want to, like, you guys know that we, as LJ, we don't charge any office fees, desk fees, or any software fees or anything like that. This is the only fees that you guys have to take care of, right? One in September, one in January. So, Mr. Hassan, this was for you. So you tell me, is that clear? Right? All right, perfect. So some of you guys ask, hey, I don't see these listings, right, in Westchester or Suffolk on our MLS. We should. If you don't see it for any reason, just go to onekeymls.com. And there they will have every listing that you guys can see here. Okay, that's going to be in here. So some of you guys say, "Hey, I'm part of MLS." Yes, you are. You're part of Live or MLS. Hey, I'm part. Am I a national? Am I a realtor? Yes, you are because you're part of MLS. You're part of LIBOR. You have to do. You're part of that. How much I'm paying? 551. One key, 175, and I have access to other boards, as we mentioned. Okay. All right, guys. We got to move forward. Next is going to be your realtor docs, right? We still going through this. A closing happens, and we're still waiting for your agency disclosures, right? Some of you guys are great at it, some of you guys are not. So we want to make sure that people who are not can up their game. We just need three things, guys. A realtor would need to worry about these forms. When you're sending out the forms to the attorneys, right? Hey, we have an offer accepted. These three forms should be included in the email so your attorneys, your buyer's attorney has a clear picture what's going on. And the offer letter will state exactly what is the offer price got accepted, what is the breakdown of it, how much money that they're putting down, right? All that good stuff for the offer. But for your agency disclosure, we need to make sure that you're telling the attorney that, hey, I'm representing this buyer. I want to make sure I get paid. So I'm telling you, he already signed these documents as your agency disclosure. And here's the deal sheet. The deal sheet has everything, my license number and my broker's license number. It has the seller's listing agent's information, everything that the person needs. So they don't have to go back and forth. So if you want to be more professional, just ask and make sure that these three things are filled out: agency disclosure, offer letter, and your deal sheet. Okay. So next is going to be your short sale, guys. Some of you guys see a property like this. It's a multi family property listed for $400,000. How come it's listed so listed for prices so low? Right? It should be maybe 600,000, $700,000 property. It clearly says short sale, right? So we already spoke. We're not gonna go through the whole 9 yards for short sale. The concept here is that the listing agent is trying to tell the bank that this property is gonna go around $400,000. Maybe because it's really beat up inside and needs a lot of work and all that. And my seller that who I'm representing is going through some hardship. The person cannot pay your mortgage. We want to get rid of this property and we're listing it for $400,000, Mr. Bank. So see if you guys can accept our offer. That's going to be around that price range. It might go for 500,000. It might go for 450, but it's still going to be on the lower end compared to what the market price should be, right? Short sale do take about 5 to 6 months to close. Again, you want to be part of those deals because once you have the paperwork in, it's just matter for the bank to accept that offer. That's why it takes a couple of months for that, right? But just don't be discouraged. When you see a property like this, still try to contact the listing agent. If you see a listing agent named Eric Lee, Mr. Hassan has nightmares for him. He sees a lot of listings under that name. You guys maybe went through that too. Person does not pick up the calls. Still, give it a try, right? If you guys are going to be the judge, hey, I called this person 10 times, he's not picking up, then you go ahead and decide not to call them. Brand new agent, just do it, okay? And see what the outcome is, okay? But short sales do take some time, but people do close short sale deals, okay? Guys, last couple of things is that one, your open houses. I apologize. I don't think we follow up with our listing agents and told our loan officers to meet them at the open house and see if they will join them at the open house. And now we do want to get more active on that. If you're hosting an open house, tell us beforehand so we can tell our loan officer, hey, this person is hosting an open house. So see if they want to go there or not, right? Or if they can go there. It's a win-win situation for the loan officer. It's a win-win situation for the realtor as well, right? All right, guys. The 2024 is here. We mentioned a lot of realtors out there did not perform though they wish to perform in 2023 just because of low inventory, high interest rates, simple as that. But things are changing. You want to close more deals, so be part of those deals and set your goals. You have database in your KV core. I see some of you guys are really active on that, some of you guys are not. Please be more active. Follow up with your clients, set your goals, see how many deals you can actually close next year. We have a team of 16 loan officers now, and they are reaching out to you guys, built relationship. Just be honest with them. Ask them any question that you have for the mortgage side. Okay. If you want to join a team, you need any help, helping hand, Team Purple, Gold, or Blue, they're available for you guys. Reach out to them and they can assist. Okay. Remember, our office Christmas party is happening on Saturday, December 23rd from 6 to 9 p.m. Okay. It's going to be at our office. We really don't know how many people will show up. Our assistant here, she will be calling you guys to confirm how many people will be attending, but we're expecting at least 30 to 40 people come in. Okay. No need to bring in any gift. And we will give one award that's going to be for Agent of the Year award. So please do attend the meeting. Okay. And that will do it from our end, guys. Any questions, concerns, anything on your mind? Any struggles, anything that you guys going through right now? We have about a few minutes. Mm-hmm. That, yeah. And it kills a lot of people's budget too, right? Like Zillow, it's just devastating. Yeah. Mhm. Oh, you mean that he's a fake agent? No, no, I don't think he's a fake agent, but he just has a lot of he doesn't have fake listings. He does have legit listings, but because it's short sale, he prices so low. It's so tempting, right? Just like the example I gave you guys, $400,000 house, two-family house. Anybody in their right mind was like, hey, let me click on it. Let me just find out what's going on. And that's what's costing us or costing agents hundreds of thousands of dollars per year. And it's just a sad story on that note. Hmm. Hmm. Yeah, correct.